Good evening, everybody. Welcome to the second half of our Accounting 203 course. We begin the last half of our class, and welcome this evening. Hope all you are well. A couple things we'll be discussing this evening, and I know some of your brain skills are a little fried after that midterm, so I'll keep the amount of actual busy work to a minimum to ease that. And I appreciate your posting your midterms. Some students still need to post their midterms with some arrangements by me, and that's fine. Please, I will have the grades posted this weekend with the solutions this weekend. In addition, I urge those who have not given me their project paper company, please do so by the end of the day tomorrow, Friday. I have 5 students who have yet to do that. I'll be posting a video this weekend to help you with the research and the writing of that paper. So please, I will post that as soon as I have everybody's topic, everybody's company. So please do that by the end of the day tomorrow, Friday. Select your project paper. If you do not do that by the end of the day tomorrow, it will result in me using tough guy tactics, and I will take 10 points off your paper grade if you do not give me a paper topic by the end of the day tomorrow. 10 points off. So that means even if you do a perfect job, the best grade you can get is an A-. So that should encourage you to make sure your project paper topic company is posted by the end of the day tomorrow. As we begin the second half of this class, we're going to be talking about, over the next couple weeks, controls, internal controls. How companies, after they record the journal entries, after they process the transactions, what are the controls to make sure they follow the rules of ethics in the operations of their companies? It's just like many of you, when you sign a contract, post a time card, sign a lease, you are ethically and liability-wise going to follow the rules of time cards, leases, legal documents. The same thing has to hold true for companies. If they do not follow the rules of generally accepted accounting principles, the rules of ethics, and the rules of law of corporations, they can get into serious troubles, even if they're not doing anything wrong in the recording of their transactions. And that's what we're going to be talking about in the next 2 weeks. Specifically this week, Chapter 8, Reconciling Cash. As all of you know from your work in the first 5 weeks, the quizzes, the midterm examination, what account is used most often? Cash, the cash account. And we have to find a way of verifying that the transactions, the deposits, the checks, all of that flowing through the cash account is correct and legal. That's the bank reconciliation. We'll be looking at problem 8.4a tonight in our textbook to practice bank reconciliations. You will have a problem in your quiz number 3 to be distributed next week on doing a bank reconciliation. Also, we're going to look at the control of understanding who owes us the money. Receivables, accounts receivables. Making sure that people don't owe us money too long. Are they paying us within 30 days or 60 days or 90 days of the date of the invoice? If they're not paying us on time, as being part of a efficient, organized business, you got to figure out why and account for it. We're going to be learning about the allowance for doubtful accounts, setting money aside for people who don't pay, accounts receivables. another form of control or internal controls. We'll be looking at problem 9.2a in our textbook as an example of that. And that will be also a sample of a question on quiz number 3 next week to be distributed about accounts receivables. So that's what we have to do tonight. Again, we will discuss and review the midterm examination next week in class. If I get all the grading done Saturday morning, I might include that in my video explanation about the project paper topic. I might include a little bit of midterm review in that. We'll see how that goes. So that's where we are this evening, heading into the second half of our class. Thank God we're now going downhill. It's almost somewhat over. Okay. So as we head into the last week of class, we're taking a look at accounting a little bit differently. As I said earlier, all the transactions have now been made. The accounting cycle is complete. You have balanced the accounts. You have provided the financial statements to those who want to see how your company did. You have closed the books and now are ready to start the next accounting period and new transactions, new trial balances, new adjusting entries. That process is now complete. We've studied it. It was completed with our completing the midterm examination. Now we look at a second phase of accounting, and it's called accountability. Kind of like a sub-word of accounting. Accountability. Do you ever work for somebody who's always screws up but always blames somebody else? Do you ever work for somebody who always screws up and says, oh, that's not my job? You ever work for somebody who doesn't take accountability? I have about 3 or 4 business pet peeves in my life, and accountability is right up at the top. If you screw up, admit it and fix it. For some reason in this country these days, here comes a political commentary, we can lie and pass the blame on everything and get away with it and get elected to be whoever. Accountability. Well, if you run a business like that, 2 things are going to happen. Either you're going to get sued by somebody you lied or weren't accountable to, preferably the government or your customers or your vendors or your employees. So you're going to get sued. And more importantly, number 2, you're going to go out of business. If you just anybody ask anybody who worked at Enron, just ask anybody who worked at, they're too long ago. That wouldn't be, you guys wouldn't remember. But Enron's a good one. Accountability. One of the things that drives me nuts about people in a position of control, and yes, I'm going to say the University of Laverne, is they're not accountable for their screw-ups. It's the economy. It's the market. It's the people who work for me. It's Governor Newsom. It's whoever. Accountability. So the second half of our course begins with being accountable for the transactions that you did in the accounting cycle. All right? Because if you're not accountable, you're going to get sued. If you're not accountable, you're going to lose your business. Very important. There's a description in our textbook, and I'll show you a slide of this later, called socks. No, it's not the Chicago White Sox. No, it's not the socks that you need in your laundry. Sarbanes-Oxley. Sarbanes-Oxley, a senator and a member of the Congress who put together a law about 10 years ago saying that if company leadership is not accountable, they can go to jail. They can go to jail. They not only are going to get sued, they are breaking the law. It's called Sarbanes-Oxley. In other words, excuse me, ladies, you got to cover your butt if you're running a company. Excuse me. You got to be accountable. And the two things we're looking at accountability tonight are accountability in cash management. Every day you read in the newspaper, hey, I can't believe it. I know this guy. He just embezzled $500,000 from a company. Not very good cash management, I would say, at that company. How did this guy get away with taking $500,000 from this company? Embezzlement, fraud, stealing. If I'm running a business, I have to make sure none of that goes on, or I'm going to get sued, or I could go to jail for mismanagement. Accountability in cash management. That's chapter 8. And the second area of accountability is in collections. Collections. When you sell something to a customer, they promise to pay you in 30 days. That's what the invoice is. It's a legal document. If they don't pay you in 30 days, you technically can sue them and go to court. Now, most of us don't do that. Why? Because if we do that to everybody who doesn't pay us, we're not going to have too many customers left over. So we have to find a way of managing our collections, understanding at all times who owes us money and how long have they owed it. And if they do owe us the money, are they going to pay us, or are we going to have to write it off? All right. I know this is kind of a nasty side of the business because I've been on the other side of the coin. I've had collections agencies call me saying, Mr. Hasse, why haven't you paid this bill? Well, because I didn't get proper service. Well, you still have to pay it. Well, I know that, but I'm not going to pay it. And if you want to sue me and take me to court, go right ahead, because I got the proof that the service was not provided. And then they back off and they end up writing it off. Or sometimes we do not pay because we just don't have the money. Well, most companies, if they're fair, they're willing to work with you on that. All right, you got some extra time. All right, can you pay us a little bit? That's fine, because that's good business. Yes, you're not being Ebenezer Scrooge, if anybody knows who that is. And at the same time, you're being ethically okay. Okay, let's work out something. Because if you don't do that, not too many people are going to do business with you. You got to find the right balance of managing your collections. That's chapter 9. So that's our discussion tonight, is accountability. If we're not accountable to our way of running the business in regards to cash management and receivable management, we're in big trouble. And some of you might work in accounts receivable. Some of you might work in cash management. Some of you might work as an accounting clerk or an accountant in a company in charge of collections or reconciliations. The first thing public auditors do when they come and look at a company's books, a third party, CPA firm, is they look at cash and they look at receivables. Then they look at payroll. Then they look at employee HR information. But cash and receivables are the first thing a public accountant looks at. Right now, I was talking to our University of Laverne controller just the other day. This week, our public accountants are on campus. No, I bet they're not on campus because of the pandemic. They must be doing that remotely. But our public accountants are now doing the audit of last year's books for University of Laverne. University of Laverne fiscal year ended June 30th. So now they're reviewing all the cash management and receivables of the university, amongst other things. Why? They're looking for the proper controls. They want, if Aubrey decides to give us a check for $1,500 for a cash, she wants to, for a class, she wants to know that that $1,500 is going to be spent properly so she gets some value in education. She doesn't want to worry about that $1,500 will be embezzled by somebody in the accounting office. That's why we have public accountants, to verify the accountability of our internal controls. So the good part of this beginning the second half of this class is journal entries and understanding account names and all that stuff is kind of very minute. We're looking at the procedures to manage the efficiency of our operation. And if you're a one-person business or you employ 50,000 employees, in order for you to get money from an investor, from a banker, in order for you to file your tax return, you have to have a third party review your financial records. And the first thing they look at is your bank reconciliation and your reconciliation of accounts receivable. That's the first thing. Anyone ever want it? Just Google the word Enron. Google the word Enron one of these days. See what kind of fun stuff you see about accountability in that one. Okay, so that's where we're starting. That's where we're beginning the second half of our class is, okay, are we accountable to the management of our organization? Okay. Internal control, Chapter 8. As I said earlier, internal control provides policies and procedures to protect assets. What's an asset? Cash, receivable. Ensure reliable, trustworthy accounting. One of the things I look over your books in your midterm examination is at the end of the process, I look at the first thing I look at when I grade your questions 1, 2, and 3. What is your balance in your post-closing trial balance? That's the first thing I look at. That's the end of the process. If that number resembles what I think it should resemble, you must have done your accounting properly. The post-closing trial balance. That tells me your accounting entries are reliable. It balances and the proper balances are in those accounts. Also, internal control system upholds the culture, the policies of the company. Not too many businesses want to have the reputation of, oh, we like to rip off everybody. I don't think you're going to be in business too long. I don't think you're going to be doing business for a company that when you give them money or a check or you buy their services and they are going to do something illegal with it. I don't think that's a very good option for running a business. And then finally, promoting efficient operations, as I said. How is a company successful? Well, they have a good product, they have a good service, they provide it at a reasonable price, at a reasonable cost, and at the same time, you trust them with the services backing up that product or service. And they guarantee to their investors that they are run efficiently. I mentioned earlier the Sarbanes-Oxley Act. It requires managers and auditors to document and certify that they have accurate accounting records. If they find something wrong in their accounting records, they can go to jail. This law came about after Enron. A lot of you, when you sign on to a new job of a company, what's one of the first things they have you do before you do anything in the office that you're supposed to be working at? They have you read an HR document, making sure you understand the rules of the company, making sure you understand the liability issues of your hiring. making sure you won't take any documents outside of your office to home or distribute them to a competitor. It's a legal document. Ensuring internal control, you establish responsibilities of people. Who's accountable for what? Usually, the more you're accountable for, the higher you get paid. You have to maintain adequate records, do your accounting records. You ensure that assets and our key employees are bonded. What is bonding? It's like an insurance policy. If somebody screws up, you're bonded. You keep record keeping of the assets. You split the transactions and the responsibility. One person can't deposit the money and write the checks at the same time. Ain't gonna happen. Even if it's a one-person business, you have to have checks and balances. If somebody deposits the money, somebody can write the checks, but they can't sign the checks. You divide the responsibility. You can't have people doing similar tasks. That's how you get into trouble with embezzlement. And in today's times, you apply technology to your controls. I think you guys, I don't know if you guys know this, but I ran a business at my own company for over 30 years. You know, one of the first things I did with new technology, this is awful to say, but I told my employees at the end of the year because I felt guilty. I put video cameras in every office. Video cameras. Because I smelled or thought somebody was stealing from me. So I used technology to establish controls. Now, after a couple of months, I felt so guilty that I didn't tell the employees about that. And also my lawyer advised me, you better tell them about that because they technically could sue you even if you charge them with something. I go, okay, thanks, Perry Mason. I'll take care of that. So the next Monday, I gathered all my employees together and I said, I'm putting cameras in all our offices for the last 2 months, and they're going to stay there. And they come on every morning and they shut off every night. Nobody had a problem with that. That was good. So you establish controls internally. One of the things I still do some consulting. One of the things I tell people when they're starting a business, the first thing you should do is have a notebook or a file with all the responsibilities of every position in your company. This is what this job's supposed to do. This is who they report to. This is what this job does. This is who they report to. They can go at any time of the day, somebody can go into a room and open up a notebook and say, hey, we're going to look for this person, a new job. What are the responsibilities? It's documented. Everybody knows what's going on. Who you're responsible to, what are your responsibilities, so on. As I said earlier, we want to maintain records to protect our assets. Remember, assets are things the company owns. Without those assets, we can't do business. And if somebody says, how much cash you have in your checking account? And you go, I have no clue. Really? Aren't you responsible for the cash of this company? Yeah, and you don't know how much cash? I'd advise that person to get some brush up on their resume because they're not going to be around very long. You establish control. A big word in business, and if any of you become entrepreneurs or become business women and men of your own companies, one word, fraud. Fraud. You want to stay away from that word. You want to stay away from anything that has to do with that word. Fraud means cheating. Fraud means lying. Fraud means mismanagement. You don't want that word in your vocabulary. Frolic, whatever, but not fraud. We're going to talk about controlling cash. Who handles the receipts and deposits the money in the bank? Who writes the checks and disperses the money? Who handles what? The person who records the journal entries should not be writing checks or taking the money to the bank. I know I'm laughing about that because it seems so much common sense, but you'd be surprised even how many somewhat large companies don't have those controls. It's kind of creepy.
Wait, I've got a quick question.
Yes, Brian.
So since you were like an accountant, so you weren't able to do accounting for your business as well as paying off your employees?
Brian, I could do anything I GD want because I owned the company.
Okay.
But I had controls set up amongst my employees that if I was doing something mismanagement, it was their responsibility to tell the board of directors that, hey, Hassman was screwing up. All right. I own the company. I could do anything I want. I could write a check anytime I want. I could go to the bank and take out money, whatever. But if that didn't follow our company's guidelines, my business manager, my office manager, my accounting clerks, whoever had the ability and the right to go to the board of directors of my company and say, I'm sorry, Mr. Hassey is not doing things the right way, and this is going on. Okay.
Yeah.
There's a big word that Donald Trump does not like. It's called whistleblower.
I know.
We're protected by the laws of this country. If you find within your business that something is not right and you're subjected to say nothing about it, that's breaking the law. That company is breaking the law. You have the right to tell people something is wrong. That's part of Sarbanes-Oxley. Now, words are one thing. Within a company, it's a lot different because sometimes companies, let's use that old word that we're all familiar with throughout our lives, they bully you. You got to be careful about that. But if a company, Brian, is run correctly, this is not necessary. Here's a typical deposit ticket. Somebody fills out a deposit of checks or cash, fills it out, takes it over to their bank at First National Hillcrest, New York. It's one individual person has to do that. At the same time, another person writes the checks. Now, the person who writes the checks shouldn't be signing the checks. That should be a supervisor or somebody else. Now, again, if I was a one-person company, that's kind of stretching it. All right. The controls there are, though, if I'm writing the checks and depositing the money, I have to have a public audit every year to go through every one of those transactions and make sure it's done correctly and no money is going outside the company. So I am protected because I have a CPA firm come in and look at that. But not too many businesses anymore are one person, maybe right when they're starting out, but that's how you control that. You have a public accounting firm verify how you did things. Depositing money, writing checks have to be kept separate. And you guys know this. Well, can I say this? Yeah, I can say it because it's from my own family. What's one of the biggest brawls in families is that Sunday night meeting at 7 o'clock at the kitchen table. What bills are we going to pay this week? We don't have any money. What do you mean we don't have any money? Well, that one of the best ways of having a solid marriage, and don't quote me on this, one of the best ways of having a solid marriage is everybody's communicating about the needs of the family and their financial needs and the money coming in.
Amen.
How many times are you in a family where either the woman or the man or even the children have no clue what's going on with finances? And that causes some problems. Now, granted, you're not going to tell your 6-year-old that you're writing checks for insurance. But one of the best things my father ever did to me was when I turned 13 years of age, he sat me down and went over how our family's finances were. Our debts, our assets, everything. And I was shocked. We owed a lot of money. But boy, that was a good lesson for me for later on in life. Everybody should understand the responsibilities and communicate those responsibilities. We have a great class at the University of Laverne I don't know if it's offered for you folks up in the northern part of the state. It's called Personal Money Management, Business 493. It's only a 2-credit course. Why is it a great course? Well, honestly, I teach it. No, besides that, it's a great course because it takes and it talks about personal money management for the family, for individuals. Taxes, insurance, cash, investments. That's a great class. I'm not saying you should take it because it's only a 2-credit course. But a
Does
lot of our seniors take it to fill in credit hours so they can graduate. But it's a good class.
does it satisfy any requirements for the business? I'll take it. I think I need some of that.
I think it does satisfy a business administration requirement. But how do we verify that the deposits that are being made and the checks that are being written are correct? Well, we look at the bank statement. There's a third party. Our banker is a third party. We deposit the money into the bank. We write the checks that clear the bank. The bank maybe charges for some administrative fees. The bank lets us know if somebody gives us a bad check and it bounces. The bank statement is the third party in cash management that tells us what happened. Now, please don't be like my wife. And when I go to my wife, I said, when's the last time you balanced your checkbook, sweetie? 2.5 years ago. Ooh. Yeah, but I always have money in the account, so what do I have to worry about? Ooh. So somebody could be taking $10, $15 out of your account, or the bank could be overcharging you for a bank fee. You know nothing about that. Yeah, that's not very efficient. That's not very good. You should always reconcile and take a look at your bank statement and it matches what you think is going on. That's efficiency. I shouldn't say that about my wife. She's a lovely person and I shouldn't say that. Now I feel bad. But she still doesn't balance her bank account. Okay. So what's the result of making those deposits, writing the checks, doing the journal entries to record them into the cash account? How do we make sure everything is cool? A bank reconciliation. We adjust the bank balance to our cash general ledger balance. This is what we're going to be doing this evening. Let's do a bank reconciliation. We take what the balance is on our bank statement at the end of the month, and we compare it to our general ledger cash account balance at the end of the month. And I bet you they're never equal because for a wide variety of reasons. And here they are. Deposits in transit have yet to be posted to our bank account. Do you ever make a deposit to the bank and all of a sudden you get a little note, oh, this is a foreign check, or this is an out-of-state check. It's not going to be posted to your bank account for 5 business days. Son of a gun. Well, that's a deposit in transit. It means you've deposited the money, but you have to wait for the check to clear because it's coming from Europe or it's going from Michigan or it needs time to clear. That's called a deposit in transit. Here's another one. Outstanding checks. Right now, if I would go to my bank balance at Wells Fargo, it would show, and I'm just making a number up, it would show that I have $500 in the account. Wow, I got a lot of money. Wait a minute. I have 2 checks outstanding for $300. Really, I only have $200 in the account. Those 2 checks for $300 have yet to be cleared. They haven't deposited in their bank account. It's outstanding. I have to be aware of that. And then the final thing with establishing corrections to bank balances is the bank charges us other fees. Do you ever get that you use an ATM at another bank and next thing you know there's $2.50 charged to your bank account? What's up with that? And you don't sometimes know about that until you see the bank statement. Or what happens if your homeboy gives you a check for $100 and you deposit it in the bank account, and next thing you know, you get your bank statement and that homeboy's check bounced. That son of a gun gave me bad check. Now I got to go out and collect it again. So the bank statement will tell you that. 3 key areas of reconciling bank statements: deposit in transit, outstanding checks, corrections on your bank statement. But at the same time, on your cash general ledger, you have book balance adjustments. Cash receipts that you have seen on your bank statements that you didn't know came into your account. You have to adjust your cash account because you see on your bank statements, maybe they collected a payment for you. Also, as I said earlier, you have to subtract from your cash account bank fees or bad checks. NSF is a bad check from the homeboy. Non-sufficient funds. You know, in the old days, I used to love it before technology, is I could write a check on Monday, give it to my landlord and say, here's my rent. But I know that check was not going to be good until Friday. That's when I get paid. I play the float because why? I know my landlord takes his sweet time. He makes sure he collects all the rent checks from all his tenants, usually deposits them in the bank account by Wednesday or Thursday. It won't clear the account until next Monday. But nowadays with technology, it will clear immediately. You can't play the float anymore. With ATM cards, with technology and cashing checks, those days are over. I used to love those days. I could play the float big time. Can't do them anymore. Okay. And also, what happens if you've made errors in your accounting? Let's say you wrote a check for $100, but you recorded it in your general entry as $110. Oops. I wrote a check for $100, but I actually recorded in my accounting for $110. I made an error. You will catch that when the check is coming through the bank. I have to correct my bank balance. This is an important slide if you want to understand bank reconciliations. All right. Let's look at a problem. I'm in our textbook. More specifically, page 318. 318. Preparing a bank reconciliation and recording the adjusting entries if required if we make any adjustments to the cash account. I'm on page 318 of your text. And also, if you go to your Blackboard this evening, that's not it, excuse me. If you go to your Blackboard this evening and you go to week 6, accounting controls, our week this week, that PowerPoint lecture I just did is that chapter 8 lecture right there. After our break at after 7 o'clock, I'm going to be going over chapter 9 key points of accounts receivable controls. But here is a spreadsheet that I'm going to be working on for 2 problems I selected tonight, 8.4 and 9.2. If you want to download that and follow along with me, fine. If not, make sure you download that after class when I finish the problems. That's a good template spreadsheet for problems from chapter 8 and chapter 9. Week 6 in-class worksheet. And here is that worksheet here. We're going to reconcile the problem 8-4 on page 318. we're going to make sure that the bank balance at the end of the process equals the cash balance, because right now they don't. In this problem, the bank balance on July 31st is $27,233. The cash general ledger balance on July 31st is $27,497. Wonder why that is. If you were my wife, Mrs. Hess, you would say, I got 27,000 in the account. What do I care? But if you're a company and one of your key investors says, by the way, could you show me your latest bank reconciliation? And you say, didn't do one. Well, sir, I'm going to pull my money out of this company, or you better find somebody who does this, or I'm going to fire you. A bank reconciliation. So, as I said on page 318, the branch company's bank statement balance on July 31st is $27,233. The branch company's general ledger cash account on July 31st, when they closed the books, was $27,497. Our job now as an Accounting 203 student is to make sure these reconcile. So you have to take events that occurred at the bank that have yet to occur on your cash account, and events that have occurred in your cash account that have not occurred at the bank, and reconcile them. Transaction or letter A at the bottom of page 318. On July 31st, wait a minute, I lost my notes. Here we go. On July 31st, the company's cash account had a debit balance, the July bank statement. Okay, we already know that. B, check number 3031 for $1,482. Check number 3065 for $382. And check number 3069 for $22.81 are outstanding checks as of July 31st. What does that mean? That these three checks have been written and credited to cash, but they have yet to come back on the bank statement. So I have to deduct them from the bank statement balance. They have yet to clear. So let's deduct them. Check number 3031 for $1,482. Check number 3065. Again, I'll be posting this after class, but if you want to follow around with me, please do so, for $382. And check number 3069 for $22.81. So those checks are all outstanding. They have yet to clear the bank. I've already processed them and they were credited to cash during the month of July, but they're still outstanding. All right, I total those up, $4,145, and I subtract $4,145 from my bank balance. Why? Because they have yet to clear, and they've already been credited to cash. They're a reconciliation item. Transaction or letter C. Check number 3056 for July rent was correctly written and drawn for $1,270, but was erroneously entered into the accounting records as $1,250. Oops. I wrote a check for $1,270 that cleared the bank, and I go to my accounting records and it says it was for $1,250. I have to make a correction. I have to make a correction to my cash account for that error. Remember, it was $20. And notice my bank statement or my cash account now automatically changes, but I made an error. So I have to, this requires an adjusting journal entry when we're all said and done. I made an error. I have to correct that error to my cash account. Transaction D. The July bank statement shows that the bank collected $7,955 cash on a note for the company. Branch had not recorded this event before receiving the statement. Now, in business, and I had this happen all the time in my company, many times I told people who owed me money, just go ahead and wire it to my bank account. Just wire it in. Today we use PayPal, Venmo, right? God, I use Venmo and PayPal almost every day these days. Good God. All right. But how do they work? They come in and out of my bank account. So in this case, somebody wired us $7,955 of cash deposited into our bank account, and I saw it on our bank statement. Now I have to add that to my cash account. It's going to be an adjusting entry for note collection. Because it came into the bank, I got to record it in my cash account. $7,955. How I know about that? It's on my bank statement. It wasn't in my cash account. Isn't this fun? Transaction E. Uh-oh. Looks like one of my homeboys is at work. The bank statement shows an $805 NSF check. The check had been received from a customer, Evan Shaw, aka Homeboy. Branch has not yet recorded this check as non-sufficient funds. So I have to take this check that I originally deposited into cash, but now the bank says it bounced, so I have to record that NSF check as a reconciliation item and subtract that $805 from my cash account. Okay. Transaction F. The July statement shows a $25 bank service charge. Those bastards. The check has been received, it has not been recorded in miscellaneous expenses because no previous notification has received. I can't tell you how many times I go online at the end of the month and look at my bank statement, and those son of a guns charge me something that I didn't know about. Bank fees. Son of a guns. So we have to record that $25 bank service charge that we just saw on our bank statement, and that's a reconciliation item to our cash. Let's call it service charge. That's going to be a miscellaneous expense as indicated by the problem. So we have to deduct $25 from our cash account, and there we go. Boy, we still have a pretty big difference between our bank statement and our cash account. What's up? I'm getting a little nervous. But transaction G. On July 31st, daily cash receipts of $11,514 were placed in the bank's night depository on that date, but did not appear on the July 31st statement. In other words, we made a deposit on July 31st. It's in the cash account, but it won't show up probably at the bank until August 1st. So on July 31st, that was a deposit in transit. And that's $11,514 that I have to add as a reconciliation item. The moment of truth. Yes, I balance. After I've taken all the adjustments that were on the bank and not on cash, that were in my cash account but not at the bank, I balance. My cash is balanced. Let's save that. Let's not just trash that. Now we can tell that investor who said, hey, show me your bank statement. Show me your reconciliation. Okay, dude, here you are. It says week 6 in-class worksheet. There it is right there. See, I balance. You can take a look at my bank statement. You can take a look at my general ledger, and now I'm balanced. And that tells the world I am internally controlling my cash position. But before I start pinning medals on anybody, I now have to take these adjustments that I made up here and prepare journal entries to properly adjust the cash account to $34,602. So I have to make adjusting journal entries. So you didn't think you could not get away with at least some journal entries. So let's record the note collection. Debit cash, $79.55. Credit note receivable. $79.55. So now I've adjusted my cash account for that. July 31 again. Ooh, the bounce check. Accounts receivable is going to be debited again because that homeboy still owes me the money. The check bounced. Debit accounts receivable and credit cash because it's been taken out of my cash account because it bounced. So I'm adjusting the NSF check. 731 again. People do this for a living and get paid very well for it, I might add. Starting hourly rate for an accounting clerk in a company with over 50 employees, $30 to $40 an hour. That's starting. Not a bad deal. But you have to do this all day, every day. Okay. All right, let's record that error in the check. Remember we wrote a rent check that was off $20? So we have to debit rent expense because we have to properly show that the rent was $20 underpaid in our books, and we credit cash, $20. Notice when cash is added to when amounts are added to my cash reconciliation, I debit cash. When account transactions are subtracted or reducing my cash balance, I credit them, just like there. And finally, the last adjusting entry is to record that service charge. And the problem called that miscellaneous expense. Some companies call it bank charges, whatever. Every company calls them something. And we credit cash because, again, cash is being taken out of our account, $25. That officially ends the reconciliation.
Question. You said, can you repeat that last part? You said when it's taking away money, you're
well, when money is when transactions are subtracting, reducing the value of your cash account, naturally you credit them. And when money is coming in to your bank account, you debit it, cash.
Okay.
Okay. So this is a typical problem you will see, hint, hint, on quiz number 3. Reconciling a bank statement to your cash ledger. And anything that you adjust on the cash ledger side, you have to write an adjusting journal entry. Notice I'm not doing any entries for these because these will clear the bank. In my next bank statement in August, I'll probably see these checks being cleared and see this deposit being made. So I don't have to worry about that. The bank will take care of that. I have to correct my accounts with these. Ladies and gentlemen, Madame and Messieurs, that's Cash Reconciliation, Chapter 8.
Question.
Yes, please.
I
Blanca,
hope-
for timeout, why do you have your camera on when all I see is like blurs? If you,
Sorry,
you should
this
just
is
shut it
quiet.
off.
Okay, I will.
Okay, your question, please.
Question. And I hope we don't have this one, but what happens when there is a check, for example, in transit, and it doesn't clear till the following month?
You mean a deposit in transit?
Yes.
Well, this just continues to be on your a reconciliation item.
Okay.
You just, I've had checks out, you know, do you ever, I don't know if any of you are involved with this, but when I had my own company, I had some employees who never cashed their payroll checks. I go, geez, do they have any sisters? They never cashed their payroll checks. They didn't need the money. So every month those checks were still outstanding on my bank statement because they hadn't cashed them yet. They could,
Yeah.
if as long as they're still outstanding, as long as deposits are still haven't cleared the bank yet, it would just stay on the bank reconciliation month after month. Good question, Blanca. Thank you.
Thank you.
Okay, so I'm going to post, excuse me. I'm going to post this to week 6 in class worksheet, this completed one. This is a sample template of a bank reconciliation, but also please, ladies and gentlemen, know why we do this. It shows us, it shows the world, the outside world, it even shows inside the company that we are managing our cash correctly. The textbook also makes a big deal about petty cash, but I'm not going to cover petty cash in our class. It's immaterial, but this is material, the reconciliation of the cash general ledger account. All right, very good. I'm going to save this. And now let's take our 7 o'clock break. When we come back from break at about 7:10, I'm going to try to get you guys out of here by 8 o'clock. When we come back from break at 7:10, we're going to talk about chapter 9 and do problem 9-2 on page 351 as a sample of accounts receivable management. All right, everybody, we'll see you in 10 minutes. Have a nice break. Jessica, who's that good-looking guy next to you?
Hey, that's my 2.5-year-old.
What's his name?
Jameson.
Hi, Jameson. How are you?
You say hi?
Hi, Jameson.
Oh, who's that? That's Mommy's teacher.
Hi, Jameson.
Professor. Wave. Say hi.
That's right. It happens to me. There he is. Thank you, Jameson. Nice to see you.
He's pretty cool. Huh? You're pretty cool. You're being so good while I do homework, huh? Yeah.
All right. Back to the real world. Ugh. All right, everybody. Welcome back. The video recording is on. And as I indicated before our break, we're now talking about accounts receivable. And one of the major problems with any business, especially small businesses, is working capital. And what is working capital? Making sure if they're going to sell something on credit, they collect it. Because if they don't collect it, they're not going to get the cash. And that's why a lot of small businesses don't last very long, because they don't collect their working capital, accounts receivable. So that's the subject of chapter 9. Let's take a look at the definition. And you guys pretty well know the definition of receivables. Here's accounts receivable. We're selling something for $950 on credit. And at the same time, we're collecting $720 from another customer, paying their bill. So Comp Store is getting billed $950. And RDA Electronics is now paying us their receivable. And we're getting the cash. So one of the key things of accounts receivable is keeping track of all these individual customers and individual people that buy our products. So we create what is called a subledger, a ledger within the accounts receivable. Now, fortunately, you guys don't have to worry about this. You're not going to be doing any subledgers. Don't worry about that. But I want you to understand that how do we collect and how do we control our collections? Well, we got to know who owes us the money. So we have subledgers. Notice our accounts receivable balance is $3,290. Oh, let me make this bigger. There we go. $3,230, and it's made up of $280 owed by RDA Electronics and $2,950 owed by Comp Store. That's what makes up our receivable. So we know who owes us what and also how long it's been on the books. That's an important characteristic of receivable management, is it's not just an accounts receivable balance of $3,230, it's also what makes up that $3,230. Specifically, who owes us the money. And that's what the subledger is for. So let's say we have an account where we bill somebody $1,000, credit sales, and then at the end of the month, they haven't paid us. And now it's 2 months. November 1st to December 31st, we charge them a late fee. And the late fee is 1.5%. We add an additional $15, which is 1.5% of $1,000 to their receivable. They now owe us $1,015, and we record the interest revenue. Late fees. We've seen those before in real life. And that's one of the ways of collecting money. It's enticing people, geez, the longer you owe the money, you're going to have to pay more and more late fees. So let's try to work on paying that balance. Now here's another interesting transaction, and whenever you use a credit card at a company, you use a credit card over the internet, you use a credit card at the store. A credit card, once you use it at a store, within 24 hours, that store gets credited or gets that money deposited into their bank account. Usually within 24 hours, sometimes even quicker. That transaction, though, is going to be affected by the fee that they have to pay to have the credit card service. That's why a lot of companies don't use American Express. It's too expensive. They take too much money away from them because of the fee for having American Express. That's why most companies use Visa or MasterCard. Their fees are lower, even Discovery. But let's say I record $100, somebody gives me a credit card. Well, I'm actually going to receive $96 of cash. And then I debit what is called a credit card expense. That's an expense of doing business. And then my sale still is $100. But I only get $96 in cash. The rest is considered an expense. I'm trying to think of the name of the company. All right, I'm going to use a company that I'm not thinking of, but it'll work. Anybody ever hear of Circle K? Circle K, the convenience store. Well, many times you go into a Circle, yeah, okay, I'll use this. You go into a Circle K and they say you can use an ATM card, but you can't use a credit card to pay for gas. Why? Because they can keep their gasoline prices a little bit low to entice you to come to Circle K and walk in the store and get a donut or a burrito. But they use that because if they charged you a credit card, if you could use a MasterCard or a Visa card at their pump, they're going to have to get charged a certain amount of a fee. So they say, okay, well, let's not do that. I'll give you lower gas prices, but you can use an ATM or cash. ATM is like using cash. So they try to keep the credit card fees low to entice you to come to Circle K or go to Arco Mini Mart or go to whoever. All right. That's why if you go to Bravo Pizza, there's a name for you of the past, Bravo Pizza in Lompoc, excuse me. And you go in and you say, I want to buy a pizza, and I say, can I use my credit card? No, we don't accept credit cards, ATM or cash. And there's an ATM machine right there. Go get the cash. Why? They don't want to take your MasterCard or Visa card because they're going to make less profit. They have to pay the fee on the credit card. So they say, no, cash only, guys, or ATM card, forget it. That happens a lot. But for companies who do a lot of sales, they can eat those costs. They can pass those costs on into the selling price. But for some businesses where there's small margins, like gasoline stations, they don't have you use a credit card because of the fees. And that's something that's interesting.
Costco does that. That's why they'll only let you use a Discover card.
Yep.
And or your ATM card if it has the Visa sticker on it.
That's exactly right, Aubrey. And down here in Southern California, I know because I'm a Costco expert, Costco uses a Citibank card. It's not Discovery, it's Citibank. So you can use Citibank all over the place there. Why? They got a deal with Citibank saying, don't charge us the fees, but you can get an awful lot of customers with a Citibank card by using it at Costco. That's how that works. That's exactly right, Aubrey. Good example. All right, there's two methods. Well, let's say somebody doesn't pay a bill, okay? Let's say somebody does not pay a bill. 30 days, 60 days, 90 days, and then we're getting into Darth Vader territory, 120 days. They don't pay their bill. So let's say you're going to write it off. You're going to expense it. In other words, you're going to say, you know what? This was a bad sale. We should have never sold to them. They're never going to pay us. Maybe we screwed up, whatever. Let's write it off. And there's two ways of writing off receivables and sales. They're called bad debts. Writing off bad debts. The first one is the direct write-off method. The second one is the allowance method. Boy, you go to anybody who does a lot of invoice sales and you say, hey, do you guys use the direct write-off method or the allowance method? And people look at you, what the hell are you asking? And the person at the company goes, we use the allowance method. Thank you for asking. You must have Professor Hassey in class. So there's two ways of writing off bad debts. For our quiz number 3, you're going to need to know the allowance method because that's the method used by most large corporations, the allowance method. But we also are going to review the definition of the direct write-off method just so you can see the difference. But you have to concentrate on the allowance method. Okay. Let's say a company determines on January 23rd that it cannot collect the $520 owed by its customer, J. Kent. This is an example of the direct write-off method. We debit the $500 to bad debt expense, which is another expense account. And we immediately credit and reduce the accounts receivable. That's directly writing it off to the accounts receivable. We're saying, okay, we're going to wipe out what J. Kent owes us off our receivable books and charge it as an expense. That's a perfect example of the write-off method. That's all you need to know. It directly goes out of the receivable into an expense account. Okay, that's how that works. Now let's go to the allowance method. This is the one you got to know. This is based on estimation. All right, because here's why. Most companies have hundreds of thousands of accounts receivable accounts. To try to keep track of direct write-offs of each one would drive somebody absolute bananas. At the end of each period, we estimate the total amount of bad debts expected to be realized from the current period sales. Now, this is where your public accounting company comes into account. Because every year, part of the audit is to say, you know what, guys? Last year, you had 5% of your sales were uncollectible. Use 5% next year. So we'll estimate that 5% of our receivable, of our credited sales, not our cash sales, of our credited sales will be uncollectible. And we'll write it off. It's based on history. The two advantages of doing this way is it records estimated bad debts Here comes the Metrolink. God, it's a mile away and you can still hear it. I lost my, okay. The two advantages of the allowance method is it records estimated bad debt expense in the period where the sales are recorded. In other words, this year we sold this amount of sales, of credit sales, 5% is written off, done. Remember the direct write-off method, that sale might have been done 3 years ago. That's why the allowance method is a little bit more time friendly. It reports accounts receivable on the balance sheet at the estimated amount that you are to collect. Example. Tetcom had credit sales of $300,000 during its first year of operations. At the end of the first year, they had a $20,000 accounts receivable balance. Based on the experience of this company and similar businesses, Tetcom estimated that $1,500 of its accounts receivable would be uncollectible. In other words, of that $20,000, $1,500. Now, how did they come up by that? History, prior years. Their CPA firm will calculate that for them. So notice the difference in this entry from the direct write-off, where the direct write-off was, yes, bad debt expense, but the credit was directly to the accounts receivable. Now look what we're doing. We're debiting bad debts expense, but look where the credit goes. To the allowance for doubtful accounts, $1,500. That's another asset account with a credit balance. It's kind of like accumulated depreciation. Remember that one from the midterm? It's a asset account with a credit balance showing what you've depreciated. This is showing what you allocated for bad debt during this period of time. That's the difference between the direct write-off and the allowance. The allowance, we estimate it and then put it in a separate account to keep track of it, keeping the original amount receivable alone. Whereas the direct write-off was not having this account and immediately reducing the receivable account. Not too difficult, right? Pretty easy. And this is how it'll appear on the balance sheet. Accounts receivable, 20,000, less the allowance, 18,500. Some companies show it this way. Accounts receivable net, $1,500 for doubtful accounts, 18,500. This is how it will appear on the balance sheet. And I would take particular attention to this. Hint, hint. How would you report this on the balance sheet? Thank you, Mr. Hassett. That's accounts receivable. Now it goes on in the problem. It shows that here. It goes on the problem. These are more examples of that. Now there's two ways of, remember how we just came up with the $1,500? There's two ways of estimating that. You do not have to worry about this because I'm always going to give you the estimated dollar amount. I'll say that again. I'm always going to give you the estimated dollar amount, just like problem 9.1, which we're about ready to do. But the textbook does talk about two methods. The percent of sales method, which is taking a percent of your credit sales, or the accounts receivable method, which is taking a aging list of how many outstanding loan receivables you have, and the longer they're aged, the more you write off. You guys do not have to worry about for calculations. I will always give you the amount. If this was accounting 2, you'd have to do that, but you guys get a break on that one. Okay, that's that. Now let's go to our textbook. I'm on page 351, and I'm looking at problem, I said earlier 9.2a, I apologize, 9.1a. 9.1a. I'm going to have you do 9.2a for next week. No grade, just practice, and we'll review it in class next week, 9-2A. But we're going to do 9-1A now. All right. Mayfair Company completed the following transactions using the perpetual inventory system. Oh, that sounds familiar. Let's do this and let's record it. Let's get out of this now. There's our page 351. Now let's open up the spreadsheet that I posted earlier to Blackboard. And here's the second tab, Chapter 9, the journal entries to record these transactions in problem 9-1A. Let's do that, shall we? June 4th. Sold $650 of merchandise on credit that cost $400 to Natera Morris. All right. First transaction, accounts receivable. And let's call it Morris. $650. Credit sales. We've seen this before in retail. $650. But now we also have to record, remember, even though this is an accounts receivable chapter, we still have to record the cost of goods sold. You know the cost of that, which was $400. And credit merchandise inventory. We've seen this before. $400. Okay. June 5th. Sold $6,900 of merchandise that cost $4,200 to customers who use Visa cards. I'm telling you, I've used a lot of credit cards in my life, but don't leave home without a Visa card. Huge. A Visa card. Jessica, get a Visa card. Tell your husband, I want a Visa card. Brian Rodriguez, Visa. That you don't leave home without it. All right. And now notice the rest of the transaction. Visa charges a 3% fee. Those son of a guns. So we are going to sell $5,850 on a Visa cards, but remember they're going to take 3% off of that. Well, 3% of, excuse me, $6,900. $6,900, 3% is $2,007. 3% of $6,900 on June 5th is $207. So our transaction would be cash, debit, the difference between $6,900 and 3%, $207, $66.93. We're going to charge credit card expense for that 3% that they take us, $207. And then we're going to credit sales, $6,900. That's the transaction to record credit card sales. You take the fee off of it. You still record $6,900, but also you're incurring an expense called credit card. At the same time, don't forget this, we got to record the cost of goods sold for the cost of that merchandise, $4,200, and credit merchandise inventory. Okay, the only difference here is now we got to take into account credit card fees. So if any of you are running a business or in a business, or if any of you use a credit card, the reasons why companies let you use a credit card is because it's convenient. You walk in the store and you can use it. How many times have you been on the internet and you see something pop up? Oh, I want that. If they took cash, you'd be in trouble. But you got the Visa card and there you go. Or how many times you're watching Home Shopping Network? Oh, I would love that. They don't take cash. I got to have a Visa card. But when you use the Visa card, they're making less money. But it's convenient. Oh, a lot of people on Home Shopping. Is there still a Home Shopping Network? I don't even know if there is. I'm sorry. Okay. That entices people to buy because, oh, the convenience of using a Visa card. Okay. June 6th. Oh, Now we have another transaction using one that's not as cool. You know, if you tell somebody you use a Visa card, you're cool. But if you use an Access card, you're you're okay, but you're nothing special. An Access card though charges only a 2% fee on sales. So in transaction June 6, we sell $5,850 of merchandise that costs $3,800 using an Access card. 2% fee. So I got to take 2% of $5,850, and that's $117. Same transactions of before, but now I'm using the lower maintenance Access card. Debit cash, the difference between 58.50 and the 3% of 117 is 5,733. Credit card expense again. Now you're beginning to see why companies all like to take cash or ATM cards. It kind of costs them a lot of money just by having that convenience. $117. And then credit sales for the entire amount, $58.50. And then we record the cost of goods sold at $3,800 and merchandise inventory. Okay, we're on a roll. I can do this. I know what you now mean by credit card sales. I also know what you mean by receivable sales. Hey, this is no problem, Mr. Hatsey. This is easy. All right, June 8th. Who can I pick on here? I'm going to pick on somebody here. Somebody I don't hear from very often. Jan Lee Montano. Jan Lee Montano.
No,
How you doing, dear?
I'm good. How are you?
Good. You ready to do some accounts receivable transactions?
Sure. I'll give it a try.
Do you have your textbook open?
I do.
All
Just
right.
to confirm, what page are we on?
Really? 351.
Okay, yeah, I'm good.
Okay. Let's look at June 8th. June 8th, Jan Lee. We sold $4,350 of merchandise that cost $2,900 to customers who use that Access card again, and the Access cards charge 2% fee of the $4,350. Just like we did in the transaction on June 6th that you can see in front of you. Why don't you tell me what would the transaction be on June 8th when we're selling $43.50 of merchandise on account with the Access credit card fee of 2%. Take your time. You can check with anybody else. You have one free phone call to anybody in our group. Take your time, and when you're ready, give me the transaction. Go.
Okay, let's see. So it would be, the credit card expense would be 87.
Very good.
And then the cash would be, cash would be 42.63.
You are right on it. You sure you're not a public accountant?
I'm not, but I did take financial accounting and managerial accounting already, and I didn't learn a thing until now.
Why didn't you learn a thing?
Because the text we used was a little more complex.
Okay.
The teacher didn't explain anything. It was all online, and I just remember some of it, but I didn't retain all of it. So.
Okay. All right. Well, that's good because you're doing well. Now, what finished the rest of this journal entry? We debiting cash $42.63. We're debiting credit card expense $87. What are we crediting?
Cost of goods sold for $2,900.
No, that's recording the cost of the good. What do we do to
Oh.
complete the sale part of this transaction?
I'm sorry. The total sales was $43.50.
Very good. So we credit sales 43.50. Excellent. Now we can record the costs. Go.
Cost of goods sold was $2,900.
Very good. And what do we credit?
Merchandise inventory.
Is that a question or an answer?
I'm looking at the one on top, so this is where I'm getting confused. Hold on one sec. What would we credit that?
It's right above you. Look at the June 6th transaction.
Yeah, but I can't see anything there. Oh, there we go. There you go. 2,900.
Very good. That's my fault. Very good. Okay.
No
Very
worries.
good.
I got confused because I didn't see anything there. I was like,
Yeah,
wait.
that was my fault. Okay, Jen Lee, thank you. You're done for the night. Have a drink.
Thanks.
Okay, thank you. Good job. All right. So as Jan Lee says, this is another credit card expense, but 2%. We record the credit card expense, the cash net, the amount of sales, and record the cost of goods sold. Excellent. Let's look at, now we get into the meat and potatoes of this. June
Can I ask-
13th. Excuse me, question?
Yes, before you proceed. Why did you enter both June and August and June 6th and June 8th as cash instead of accounts receivable?
Because we use credit cards. There's no mention of saying merchandise on credit. We sold merchandise with credit cards, not receivables.
Okay, just to let you know, that's what the example is
What example?
that you gave us.
Yeah, I recorded the cash.
No, I'm sorry, and on the book, what you provided to us for review, your problem
Oh,
set.
yeah, I didn't give you the next slide where they show the cash being collected in the same day. So I kind of skipped that step, but always record it directly to cash. Thank you, Blanca.
Okay, thank you.
Very good. Thank you. I appreciate that. Okay, June 13th. We wrote off the account of Abigail McKee against the allowance for doubtful accounts. The $429 balance in McKee's account was from a credit sale last year. Okay, so we've already written this off last year. Now we're going to close that specific account. In other words, last year we did a bad debt expense debit and a credit to the allowance for doubtful accounts. Now, this year, we're going to specifically write off Abigail McKee's account because by them saying we're using the allowance for doubtful account. So the transaction is this allowance for doubtful account debit, $429, and credit accounts receivable, the specific account, Miss McKee, for $429. We've already set the money aside in a prior year. Now we're specifically writing off her account because she's never going to pay. So now we debit the allowance account, taking it out of that reserve that we set up, and now specifically crediting that accounts receivable account to write it off. If this was a direct write-off method, we would just debit bad debt expense and credit accounts receivable. But since they're told in the problem right here that against the allowance account, you have to assume they've already set that money aside in the prior year, and so you write it off to the allowance account and then credit the receivable. Okay. Now, on June 18th, this is easy. We received the Morris's check in full for the June 4th purchase, and that purchase was accounts receivable. So if they make a payment, cash, $650, and credit accounts receivable. $650. Okay. That's kind of the basics of entering in receivables. At the same time, we're also entering in credit card sales that we collect within 24 hours. And Blanca was technically right. You should do the accounts receivable. Then the very next day, you take it out of receivable and take it to cash and take out your fee. But I'm just going to, since it all happens within a day, we're just going to directly receive the cash, take out our credit card, and that's the way of doing it. At the same time, we've written off an individual account to the allowance because we're using the allowance for doubtful accounts system. This is problem 9-1. Now, for next week's class, again, not for a grade, but trust me, this will help you with the quiz, is I want you to now do the next problem, 9-2A, on page 351. All right? That's setting up the allowance like we just talked about in those slides in our PowerPoint. What were our credit sales and what % of those credit sales are going to be bad debts, uncollectible? So I'd like you to record those journal entries, 1A, B, and C, and then show how those would look like on a balance sheet and with those particular account balances. So do that. It should take you 5-10 minutes. But I want you to do that on your own next week because it helps you refer to the text and to the problem. Problem 9-2A, and we will do that right off the bat next week in class after we look at the midterm examination results. Okay? 9-2A, next week's class. All right, I'm going to save this now and I'll post it to Blackboard as soon as we're done this evening.
I have a general question.
Yes.
I was under the assumption that the allowance for doubtful accounts could only be claimed or processed at the end of each year. I noticed that you entered it here and it's dated June.
Well, the allowance for doubtful account is at the end of the year when you have the estimation of total amounts that you estimate to be totally uncollectible. Then you debit bad debt expense and credit the allowance for doubtful accounts. Then during the course of the year, like this transaction in June, when you say, okay, this Miss Morris is not going to pay. Maybe she died. Maybe she's just says, we're just going to write it off. Then when you do a specific write-off of an individual account, you can do it at any time during the year because you're taking it out of that reserve, the allowance for doubtful accounts, and then crediting the receivable.
Makes sense.
Thank you. Good question. All right. Let's do this, and then we'll call it an evening, I think. Yeah, if I can find it. Okay, so your duties this week are to, if you have yet to do so, make sure you determine your topic company that you select from the Fortune 500 and post it to this discussion forum so I can let everybody know what companies we're going to be doing. And then I'm going to be doing a video over the weekend that I will let you know that will be posted to Blackboard and YouTube that'll explain how you go about beginning the research to get the information to do this paper. All right. But I won't do that until I have everybody's topic selected. So that's for those people who have yet to give me their topic. Please do so by Friday, tomorrow night. If you do not do so by Friday, I will take 10 points away from your grade for this paper. Okay, that's that.
Mr. Hassey,
Yes.
I just wanted to let you know that I posted again for my topic. I gave 3 options. I'm running out of options. Everybody's taking them.
Well, there's a lot of corporations in the world.
Yeah, I gave 3 options, so I posted on the discussion board.
I saw that. I would go, if I were you, Nike.
Okay, perfect. I'll take that one.
Okay, and I'll include that in our list, Cynthia.
Awesome.
Nike.
Thank you.
Okay, very good. How's your
Okay.
computer working?
It's, it's okay.
Okay. Cynthia,
Thank you.
Why don't you share with the class? Why don't you share with the class what you emailed me today about what happened to you? I think that's important. Go ahead.
Sure. So I was having issues with my computer, and I guess I got frustrated because I'm working from home, I'm using my computer, and so I need a working computer and printer and everything. So I was pretty much here by myself, and I couldn't figure it out, like what is going on with the computer. So I Google, that's what we all do, like we Google stuff to see if we can figure it out. And I happened to come up with a website that looked very legit. So so I go in there, and there's just like a support number, tech support, and so I call. And so, everything looked fine. They kind of like talked to me. Okay, so what kind of printer you have? And so at that point, which it was the weird thing, they sent me a link, which I still don't know to this point, like, why did I click the link, It's one of those things. So I should have asked more questions, I guess. So at that point, the technician goes like, okay, click the link, and then we go from there so I can help you figure out what's going on with your printer and what it's not connecting and your computer and blah, blah, blah. So I click the link, and then immediately the person like remotes into my computer, like says control on my mouse. And so I'm freaking out, like literally freaking out, like, okay, what's going on? And, the guy, he was like, I know you're freaking out right now. Like, I know your concerns. Like, I'm a technician. I'm an HP because my computer's HP. And, this is what I do. And I don't know, like, he sent me an email. Like, he sent me an email with everything that happened that day, with everything that he did. He did fix the problem. My computer printer, they work together. It's working fine. It's just I still have my doubts. I'm very scared because, he completely took control of my mouse. He was, I don't know, like you could see everything that he was doing. He was going into the panel control of my computer. He was hooking up the printer, going back and forth. It was the scariest thing ever. So, I called my boyfriend. He came, of course, he was upset because it's like, why did you click the link? Like, what were you thinking? And I don't know, I think it's just class, everything is just, I was just frustrated. I just needed to be fixed so I could get my work, because like I said, I work from home. I needed to submit something on time, and yeah.
And then Cynthia called me and said, Mr. Hassey, do you know anything about this company? And fortunately I did. What the bottom line is this company is trying to protect you, or installing, that jury is still out, what is called malware. If anyone's ever heard of malware, malware, it's a file that can be installed or in your computer that can send people information about your computer. So they can hack into you, or they can totally trash the software and the hardware of your computer. Okay. So Cynthia had this guy come on and download this file so he could go in and take a look at her computer and see if this malware is anywhere in existence. Now, my first thing is, okay, he might be legitimate and okay, but especially if he's in Google, but you never, ever let anybody in to your computer, no matter how honest they are.
Yeah, lesson learned, definitely. I
can be
can
very
sleep at night.
Because as Cynthia said, she was freaking out because literally you're sitting there in front of your own computer and you have no control of what's going on it. They're running it from their location. That's creepy.
So Mr. Hassey, did you say, wait, so they're good, they're bad? Wait, what?
Well, I checked them out even more, and they're fine. I know what this guy was trying to do. He was looking for malware.
Okay.
And so I think you're okay. But in the, he might, again, I'm not saying that this happened, but he might have installed a file into your computer that maybe in 2 weeks will start doing something.
Oh my God.
So I'm not saying that's going to happen, Cynthia, but it does happen. So I want you to know that if your computer starts acting weird again,
Okay.
you shut it off and you contact
Okay.
me,
Okay.
and I'll tell you what to do.
Okay. Awesome. Thank you so
Okay.
much. Okay.
Because no, let me trust you. 10, 12 years ago, this happened to me,
Oh my gosh.
and I fell for the same thing, and I had to get a brand new computer.
Oh my gosh. I know.
So
I'm just.
I can understand how that happens. I was stressed out. I was doing all this work. This was in my office. And I was doing all this work, and I wasn't paying attention, and I didn't listen to my sixth sense saying, don't you do
Exactly.
this. I was in a hurry, and I had to replace my whole system.
Oh my
And I
God.
can't tell you how much money that cost me.
Oh
So,
wow.
so just be careful. And everybody else
Yes.
here listening, and there's a lot of people, a lot of organizations. I got a PayPal message 2 days ago from PayPal, which I do a lot of business on PayPal. It looked exactly like a regular PayPal message I get, except I knew enough to look at the bottom line of that message where they usually say, details about the company, and that line was not there. So I immediately contacted PayPal and said, you guys got dummies out there trying to hack into my
Wow.
system. And they said, thank you. And they took care of it. But it happens all the time. You got to be careful.
I
And the
know.
more
It's just, it was very weird, Mr. Hesse, because like I figured, like I thought he was gonna walk me through it to the steps on the phone, and
Yeah.
he sent this link. I'm thinking, oh, okay, maybe I'm gonna click it, and then the steps are gonna come up. But then,
Yeah.
like he should have asked, I guess, like, hey, do you give
Yeah.
me the permission to do this?
Yeah, that's
I
why
don't know.
that's why I'm thinking just be on the aware. He might install
Yeah.
something in there that might happen down the road. So just be careful.
Okay.
Live and learn. I did the same. Don't think you're stupid. I did the same thing 10, 12 years ago. So don't worry. It happens.
Is there a
You
way
just-
to know, like, if I take my computer somewhere to see if there's something installed?
Yes, what you should do if that happens, I wouldn't do it now, but if that, let's say it starts acting weird again, shut it down and take it to, do you have Best Buy up there?
Yes, because that's
Best
where I
Buy?
bought my computer.
You know the Geek Squad?
Yes.
Take it there and they will help you.
Okay.
I've done that with other computers of friends. We've just taken the
Okay.
computer to the Best Buy, to Geek Squad. They run diagnostics, they clean everything up, or they wipe everything out and you start from scratch again.
And start from
But they'll
scratch.
know what to
Okay.
do.
Okay.
Only trust them. Don't have somebody from off-site come screwing around with your
But
with
at
your
this
computer.
point, he already entered my computer. I'm thinking if something's
Yeah.
gonna happen, he already stole my information.
Yeah,
and everything.
exactly. But just remember that's a good source for, and they're not that expensive. They're really very reasonable, and they explain to you exactly what they're doing, and you can see them do it in the computer. They don't get inside your computer through like this guy did. Okay.
Thank you so much, Mr.
All
Hesse.
right. But that's a good lesson because I'm glad you were able to
Yeah.
share that story because it happened to my father who's 84 years
Yeah, very
old
scary.
because he's an elderly person. He would never even thought twice. Oh, somebody wants to help me out. Oh, okay, come on in.
Yeah. Ah,
Next thing you know, they got his bank account.
oh my
So,
God.
so you got it. So I'm not to scare you, but you did everything right. Everything's okay. Okay.
Okay.
Just know how to handle allowance for doubtful accounts. That's all I worry about.
Thank you. Yeah.
Thank you. All right, everybody. That's our accounting computer story for the week. And poor Cynthia she was really stressing out. I felt so sorry for her.
Mr. Hussey, I would like to say I also had a similar situation, but I knew the tech that was going into my computer, and what they advised me was to, after they were done, to go in and change my password.
Very good. Yes, definitely.
Immediately change your
Good idea.
password.
Yes, Cynthia. That's
Okay.
a very good point, Michelle. Thank you. Go in
Thank you.
immediately and change all your passwords, Cynthia.
Okay.
Okay. Okay. Great. Thanks, Michelle. That's excellent. Well job. Good job.
And
All right,
if
everybody.
if she goes into her bank account, go into don't go on it as she regularly go on
Yeah,
her into the bank.
I would definitely not log into any bank accounts. Like you should do it
Right.
from your phone because they can capture
Yeah.
keystroke.
Or go into the bank,
Right.
go into your branch and actually do it there.
Right.
Oh, okay.
That's the
Okay.
best way of doing that. Thank you, Brian. And that's
Thank you.
exactly right. Don't do it from your computer because it might already be screwed. Excuse my
Oh my
French.
God.
Okay.
Okay.
All right. It happens to a lot of people. It happens to thousands of people every day, Cynthia. So trust me.
One thing
oh.
you could do, Cynthia, sorry, real quick, is
Yeah.
all your passwords that are saved in your browser,
Yeah.
have the browser forget them.
Yes.
And then go on your cell phone and change all of them.
A change, yes.
Okay.
I know
Okay.
that's a pain. I know that's a pain to do, but that is necessary right now.
Okay.
Good job, everybody. That's great. See,
Thank you.
it's worth talking about this. This is good.
Yes.
All right, everybody. Thank you. I will post the midterm this weekend. Pick, so for those who haven't, please pick your your company for your topic. And I'll see you guys all next week, and look for my video this weekend about our project paper and how to begin going about doing that. Thanks, everybody. Good
Bye.
class.
Thank you.
All right. Talk to you later.
Good night, everybody.
Good
Good
night.
night. What, baby?
Good night.
Mr. Hassan,
Yes, Mr.
I have till Friday.
You have till Friday night at midnight.
Thank you. Okay.
Is that okay?
Yes. Oh, and thank you for your reply.
Did that help?
Yes, I was going over like I translated numbers there. So
Uh-huh.
and so that's my
Good.
biggest problem, trying to make sure I don't do that. But
'Cause
I'm
I'm
up
not
in the
Go
middle
ahead.
of the night. But
I'm not gonna grade until Saturday morning, so that's why midnight Friday is perfect.
Okay.
All right?
All right. Thank you.
See
Good
you
night.
later. Bye-bye. I'm such a nice guy. Adios.